Good morning, Zinger Nation. Hey, happy Friday, everybody. We made it. Yes. Smash that like button because we made it to Friday. Welcome to Pre-Market Prep. Spencer Israel here. Joel is here, as always. Dennis is here, as always. We got a lot going on today. We're going to talk about the reversal yesterday, obviously, right? Reversal from growth to value, from up to down. Undoing what happened on Wednesday. We're going to talk about Rivian. We're going to talk about FedEx. Darden restaurants. We have a potential M&A deal, maybe, according to the Wall Street Journal. We're going to talk about that. We're going to talk. What else? We're going to talk. We're going to talk. Options expirations today. Don't forget that. We're going to talk about that with our guest, Cece Lagentor from Options AI at 8:35. Do not forget options expiration today. It is the last one of the year. Go ahead and smash that like button, and let's get this show on the road. This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel. Good morning, Joel, and also a very happy birthday to Sin730 in the chat. Happy birthday, my friend. Joel, good morning. What's up, man? How we doing?
Not the market, Spencer. Here we are on this quad witch Friday, trading in the red by 27 and a quarter handles at 46.32. We're a little bit off the pre-market low of 46.24 and a quarter, but we were just talking about holding 4,700 upper right chart here. With 15 minutes, get that back to a daily. We were just talking about holding that area, and now we're need to hang on to 4,600. The low for the week so far is 45.92. We had an 0.2 low on Wednesday, and only 30 handles away from that. Besides Goldman Sachs saying that crude could go to 100 in the next 2 years, it's down to $1.50 at 70.65. Crude down, breaking down under 70. We haven't seen that in a couple days. Gold up 15.60 at 1813.80. Silver having another good day, up 17.5 cents at 22.66. Bitcoin getting hit with the rest of the market today. No place to hide, down $1,000, right at 47K the futures. And Ethereum, that's down $196.50 at 38.25 and a half. Let's bring in Triple D here. Triple D, man, we went from bliss to. I don't
Are you
want to
going to
say
swear
it.
for the first time on the show? Joel's never swore
That's
before.
not a swear.
I say piss. I say other stuff.
You say naughty words, Dennis. I hope your kids don't listen to the show.
It's mildly naughty.
Mildly naughty.
Yes, I'll say it. The spy went from yesterday's show of bliss to this morning's show of piss. I mean, do we now look? I think you got to look. Obviously, we got a spy adjustment too for you traders out there. It is ex-dividend today. It's the forward, the days of the year where you got to adjust your SPY for that. So the adjusted close on SPY is 464.81 to pay the dividend. That's the nice thing about futures. You don't have to adjust for the dividend. I will say major support is 460 on SPY.
Yep.
That's a super duper support. We're getting back down there. So, I mean, here we are in this market where you're buying rips, you're doing it backwards, you're selling dips, you're doing it backwards. It's a big dip here today. I think, the time to sell was yesterday morning. If you're looking at selling stuff this morning, you're chasing it. Again, I don't know where we go. Nobody knows where we go long term here. It's one of the most difficult markets to call it I've seen in a long time. All I know is I don't want to own growthy stocks, at least not all growthy stocks. If you want a little bit, I guess you have a little bit. But ARK is trying to break down and make a new low on the move. Incredible to give all that back. It had that 3-day awesome rally back in early December, and now here we are 2 weeks later, giving it all back. Low of the move for ARK, 89.03. Joel, I don't even know what to say about this market.
I tell you, I mean, what would make you? I'll tell you, for me, is if we break 4,600, then I mean, I don't want to say bear market, right? Because you're going so far down, right, and all the moving averages and everything. But to me, I mean, you take out that low from last week on a quad which are often turns in the market. And we could have a pretty bumpy rest of December and start to the year. So as bullish as I was, yesterday when we were trying to, look like we were going to close over 4,700. Looked like we were going to make a new all-time closing high, right? We had that big lead, and it
Yeah.
was just a leak all day. So I don't know.
Again, we know
be
Apple had a
bullish.
big morning. We know SPY. We've talked about this on the show. Yes, Gil. I know Gil tweeted out that we don't know about SPY and the big 5 stocks hiking up the whole market. But Gil, if you listen to the show, we talk about this every single day, how SPY has been a poor indicator for this market for the last 9 months. That's why I like to look a little bit more broad. I know IWM's a small cast, but it gives you a better feel of what is happening overall, where SPY has obviously been held up by Apple. Amazon is held up quite well, but Microsoft and Apple, the two big guns, have really held up. They started to crater again yesterday. Microsoft trying to break down and make new lows on the move as well. I still own Apple and Microsoft in the long-term portfolio. I'm not bailing on them, but I'll tell you, if they were on for short-term trades, I would be very concerned.
Yeah, big. It's had two big red candles in that. It's had just a major run from just under 150 to 180. That's pretty uncharacteristic for Apple.
And the
Um,
valuation, like you're looking at the multiple expansion here on the, if not the, I think it's the biggest company, Microsoft or Apple. They're always shading.
Apple's back up there.
Is Apple leading again?
Yeah, they flip.
I mean, they're not cheap relative to themselves. Apple and Microsoft are not cheap. I mean, relative to some of these, growthy, 100 times earnings stocks. Yeah, sure, it's cheap, but not relative to themselves. I mean, Apple 3 years ago was trading PE of like 15, 16. And now we're kicking over 30. So a lot of this move hasn't really been that the company has grown so much. It's simply been multiple expansion. So money hiding in all these stocks, that money coming out here this morning. Again, I still think you're selling rips. I'm still not that confident to go and add a whole pile of stocks to my long-term portfolio and say, yes, Santa's coming to town and we're all going to be okay. There's just too many unknowns. You got to keep some cash. You definitely don't want to be on margin here, long-term invested. I think you need some cash in case this continues to get ugly.
Joel, remind me, on Wednesday, didn't Gene say he specifically does not see multiple expansion? If these stocks are going to rise, it's going to be due to the fundamentals and the earnings, not the multiple expansion. Is that? Pretty sure he said that.
Well, how far can it expand? I mean, I think that's pretty obvious because I mean you're trading what is the P on Apple right now? It's over 30, isn't it? I mean, how far? You're not going to 50. I mean, unless the market just gets absolutely crazy, I don't think you're going to 50 on it. So I don't think you can. I think the company has to grow. Gene has the bull case, and his bull case is not built on multiple expansion. His bull case is built on that they're going to be a big part of Meta. They're going to be a big part of the metaverse. They're going to be a big part, maybe, even in the automotive. We don't know that yet, but autonomous for sure. They're going to be tied up into all this stuff, and that's where the next phase of growth is for Apple. At least that's what I heard him say.
Yeah. Well, he actually said a couple years ago that I don't know if it was for 20 or 21, but he thought that the multiple was low. And he thought that it was going to get him, a little bit more of a generous multiple. Now it has, and now, they added the increase in price, and now they're gonna have to prove it on the bottom line. But the whole market is overextended. We got super overextended yesterday, and today's the day of reckoning. It's just going to be. I mean, I've never seen 100 handle like 4,600. I've never seen it just rip. And we can look at the SPY or the S&P.
Yeah.
I mean, there's just nothing in there. And that's just a huge range. And now we're pressing down on the bottom of it. I think you got to be really concerned if we come down to this 4,600 and hold, then it'll just be the same old story. We pop back up, but man, under 4,600 here, and I think we're going to have one of those pretty bad down days. But support is support until it's taken out, and right now we're 28 handles away.
The market likes to punish the maximum amount of participants. So when you're looking at that, you're thinking, okay, a lot of people probably position short into the Fed meeting to say, okay, we think he's going to pull the punch bowl away. He's not. He's going to be hawkish. And you want to squeeze all those. So what you saw was a mini short squeeze from everybody that was positioned short just to screw all those people. kiss a new high after hours on the futures, which we did, just to make sure we screw you, because nobody likes to be, short anything making new highs, especially the market. So, and then, what do? They pull the, I know Gil says the undercut and rally, but the opposite would be, and I don't know what the opposite's called, but the new high and then the rug pull.
Overextended punch.
The new high and the rug pull. So, I mean, the breakout failed. And we thought we were going to break out SPY yesterday morning. If you're thinking that, they pulled the rug out from under it. Again, this market just punishes the chasers. Punishes. I mean, 2021 is the year. If you are chasing moves, you are losing money. And 2020 was the year that chasing paid. 2021 was the year that chasing did not pay. And if you're chasing moves here, you are absolutely doing it backwards. It's been a fantastic contrarian year. I had a fantastic trading year, just fading moves. So again, you got to know the environment we're in. You're coming in today and you're saying, I can't take it anymore. I mean, you just sold off 100 points. So, really in the S&P, we're just still range bound here.
Yeah.
So let's, not call it the end of the world here until it actually, starts to look like it is. But I mean, you've got to be fading these moves, and especially on the upside, selling the rip has worked better in 2021 than buying the dip worked in 2020. The selling the rip has been amazing. It really has. Like, I know people don't like to short stocks, but I tell you, like, it seems like every time you get a good headline on something, they turn around 2 days later and it gave it back. I mean, Intel too. I mean, there's so many stocks that look that same way. Hog. You think, okay, well, it's pulling out. Oh, no. We'll rally at 20%. Look at the hog chart. Look at that hog chart. Up to 44.
Slaughtered.
And boom, rug pull right back down 2 days
Slaughtered.
later.
Absolutely
they give
slaughtered.
it back, man. They don't hold the gains.
It just, aside from the Fed, aside from the quad witch, there's been news flow has not been good with the virus. Now we don't know what the eventual outcome is going to be, but I mean, I was looking at we discussed this on the 3:30 show. Canada, came out and said something, and then Fauci was saying things, and efficacy of the testing. So there's besides the interest rates and the worry about that, which is not good for the market long term. I mean, you got a real negative news flow as far as the virus goes, and who knows how that's going to turn out. So a lot of negative factors out there for the market.
There's lots of positive factors too. So this is why. Go ahead.
I was going to say, speaking of range bound, I'm surprised Dennis has not mentioned the Russell today at all. But if you look at the IWM, I mean, look at the range you've been in for since February.
Nowhere. I mean, huge support. You're on here again. So do we eventually crater? Do we eventually go down? It's so hard because you know what the other side is? We can give all those bear arguments. The other side is the team trade, though. I don't know where to go. I seriously don't sell my stocks because I don't know where to go. So I go to cash and I'm losing. So you still have the Tina trade on that there's no alternative. And you look at this and you're at huge support on IWM. It's why I put a little bit of IWM in my long-term account. I'm like, I don't know where we go. And again, if you hear somebody and they're saying this is what's going to happen tomorrow, they don't know what they're talking about. Because I tell you, nobody knows what's going to happen tomorrow. This is one of the hardest markets to call that I've ever seen. I'm not joking. It's whipsaw, it's chop. The only thing you can say is we're probably still going to have volatility and you don't want to be chasing. But to say, oh yeah, we're going to be down 1,000 points today, or we're going to be turn around and go green, it's a coin flip right now. This is a really hard market to call.
And RM is saying, well, if this pattern on the IWM continues, that would mean logically we would have to bounce from here.
It's bounced out of here a lot of times. I'm not going to argue with it.
Right.
It could again.
Right. It very well could again.
Yeah, it could also do what it did on the upside, right? You got everybody in the pool when it broke out in November. This was it.
Yep.
We're going.
Yep.
And then I was thinking, when I'm like, oh boy, when it comes back down to that top of the range, and and I believe that was like 232, 233. I was thinking, man, if this holds, I was actually thinking about it there, like old resistance for so long. and then it broke through it. Then it didn't act as much support. I don't know how long it held up there on the dailies, but and look at the IWM. Yeah, it's been in range bound almost the whole year, and now beating down on the bottom of the
But we're
range.
just there. Like, so it's not panic. I'm gonna say it's not panic time, and it's
Nope.
not get your boots on and we're ripping higher time here either. It's trading time. It's day trading. It's fading. That's what's moving. Don't get convicted in any direction. That's how I'm playing this market. Just whatever. You want to sell off, do some dip buying. You want to rally, I'll do some rip selling. And that's what I'm going to continue to do. It's worked all year, and I'm not going to chase it. Like yesterday morning, again, after a 130 point S&P rally overnight, basically from 2 o'clock till overnight and then to the next morning. You're buying those up there,
It's
you're absolutely doing it
140.
backwards. And now you just dropped the 100 points. So again, you're probably doing it backwards if you turn around and getting panicking here today. But again, anything can happen. So you've always got to have stops. You got to have awareness here. But wait, to Spencer's point, we're at critical support on IWM. We're at critical support on the growthy names like ARKK. And then you have this unbelievable rotation, because we can talk about how ugly the market is, but it is not ugly for value stocks. Berkshire Hathaway up $6 yesterday. The
New all-time high.
All-time high. The separation between Warren and Kathy is nothing but astounding in the last month. So in the last month, not even, in the last 2 weeks, Berkshire Hathaway's up 10%. ARKK in the same time period is down 15%, 25% move. And if you're looking at those two, just opposite. If you could put those two charts, they're exactly opposite. It's showing you how much this rotation is happening in this market. Growth to value just keeps flying in there. Again, though, are we overdone on that side? Maybe. We've hit Kathy, from 125 down to 90 in 5 weeks. And in the same time period, we've bought Warren all the way up from the 275 just a week and a half ago or 2 weeks ago up to over 300. So it's hard to just come in and say, okay, well, I want to jump in value now. It's how you're positioned. And maybe that's why I got the barbell approach. Little bit of value, little bit of growth, mix it up. I'm mostly value. It's just the way I am. It's why my portfolio is having a better 2021 than it did 2020. But I mean, it's amazing, the separation here and the rotation is awesome. Every single day, it's huge rotation.
What's Kathy's ETF? The new one that came out.
Shoot, I don't remember.
It's CMSL or something like that.
Remember, it's getting bid up because there's no liquidity that day. Holy, that was dumb money, man.
CTRU.
I like to see where that's at. Holy mackerel!
Well, somebody was buying a 23 or 24 that morning. $23.
Yeah, I remember
that morning.
Yeah, I remember you talking.
You won't see it on the chart, but it was like just because they were mentioning it on CNBC and the market makers weren't online yet, and it came right back in. Yeah, so trying to make new lows on the move. I mean, it's just all the same stuff. I mean, and all of her funds, it's all the same stuff. So it's hard to just come in and oh yeah, I'm going to buy this one over this one. It's all growthy names at ridiculous valuations. So that can turn. If we go into a bull market, she will start to outperform because everybody's quick to, tell me how, good she's done in the last 3 years, which is absolutely true. 2019, 2020 were big bull markets. Whenever you're that heavily in higher growth names, higher PE names, those do well in a bull market. They do really, really bad in a bear market. So that's what we're seeing. We're seeing a little bear market in her stocks. Could she turn it around? Absolutely, she could turn it around. Am I buying her stock or her ETFs? No, because it's all full of nosebleed valuations and nothing's cheap, and it's not my style. My long-term portfolio is built on value because me and Joel went through 1999, 2000. We also went through 2007, 2008 when all those stocks got hammered to the tune of 80 to 90%. I'm not doing that again.
Okay. All right. You want to get? We did have some earnings here.
Yeah,
kind of late.
We did real fast. Thank you, Renee. CTRU, as in see through. Get it? Got it. Good. Okay. Moving on. Let's start with FedEx here. FedEx had earnings last night. EPS was good, above estimates. Sales good, also above estimates. Then they raised their EPS guidance for the fiscal year by about $1 from the around $20 ish to $21 range. That came in above the estimate. They also announced a $5 billion buyback, and they're accelerating the buyback program already in place. So earnings beat, guidance raised, buyback. You know what to do, market.
Value. This is a value stock. Value stocks loved right now. So, if they say anything okay, they want an excuse to buy this kind of stock. So again, FedEx, what's it trading? 12 times earnings or something? 10 times earnings? They like these kind of stocks. So it's not surprising that they rip this higher.
Yeah, it got overdone. Just on the headline, you almost got to 260 there, 259.30. Now you've backed off $8 there, so that has me thinking you're not going to get another look at that today. You always can. Last night when we were talking about this, if I would have had this on the long side, I would have been out at 255. And probably would have missed out on $3-4, but there was a triple top there. That's where we came off hard for. So I'll just do I mean, that's still a ways away, but I do a reset on that. If you don't think you're going to get to the pre-market high, keep an eye on 255. That was a triple top in the middle of November. Support coming down. These are tricky ones, but right now the just very short term support is at 250. That's been holding up since the 4 a.m. open, and the top of yesterday's range is down at 44.75. But not chasing it here.
I want to take it back to the chat. They're having a good conversation about Robinhood. Some people saying it's good short. Some people saying it's oversold. I'm going to say it's massively oversold. Like, I mean, to the tune of epically oversold. This stock was $40. This stock has been straight down ever since basically day 2 when they were just so stupid and they just ripped it up to $80. We're at $17.85 here now. This stock has been hammered hard. This stock, one of these days, I think it, in my opinion, is way too late to short this stock. Some people are saying, let's short this stock. I think it's way too late to be short a stock like this. There is so many people who are killing it on the short side. One of these days, it's going to rally 25% in like an hour. And people are going to be like, what just happened on Robinhood? So, I mean, am I coming in putting my long-term portfolio? Absolutely not. Can it go lower, longer term? Sure. It can. But this thing was $35 3 weeks ago. It's been cut in half in 3 weeks. So many of these growth names are really oversold. So I know the trend is your friend. I know the trend is straight down. I'm not saying go long Robinhood here. But if you're coming in and initiating a short now, you are way, way late to the party. The time to short Robinhood was any time, basically before now. So, I mean, it's just so oversold. I cannot, say start shorting Robinhood at this point in time. I think you're way late. I think you're going to get your head ripped off one of these days.
I mean, they don't have earnings for a while. Crypto's been, I mean, what's catalyst?
It doesn't need a catalyst, though.
No, you don't think so?
You have to understand something. What's the short interest, Spencer, on Hood?
Oh, let's look it up.
But you've got to understand when you have, I've traded stocks on the short side for 21 years. I know what I'm talking about. When you have stocks that are this trending down, they have violent little rallies all the time. This hasn't even had a violent rally.
I know.
So eventually you're going to get a short squeeze in this thing. But I'm not advocating to go long Robinhood at this point in time. I'm just saying I can't initiate a short at this point in time. There's way too much risk. Because this thing will start going and then it'll just, this is what happens. These things go down, and then they spike. And then they down. I mean, what we saw with ARKK was similar, down. They're like, oh, let's sell short ARK at 90. And then it's 100 in your face. That's when you're getting those huge rips. That's the better time to initiate a short. Not when there's going down, and initiating now. Wait till this thing rallies like 10, 15, 20%. Then maybe you try from the short side. But I'm not sitting in here and, I know the trend is your friend. I know it's still down. I'm not buying the stock. I'm not advocating to buy the stock. I want to be very, very clear because somebody will say, oh, it went down and you were saying to buy it. I'm not saying that. I'm saying I would not short it. I think you're way too late to short it.
To answer the short interest question, Dennis, I don't know. We don't have that.
I'm sure there's some people making some money on the short side on this, and it's been an awesome short. Was it overvalued? Absolutely. Have they hammered this stock to the point of like, I'm like kind of shocked at it? Kind of. It's like gotten to a point. I even have tried to play the bounce a couple times. I tried to play the bounce off 20. That didn't work. Again, stopped out. I've tried to play the bounce a couple times. One of these days is going to have a wicked short squeeze, though.
It has a pair of lows in the same area. Actually, almost a matching range from yesterday. 1789 and 1980 was your range on Wednesday, and then 1989 and 1771. But you are breaking down through that now. You're finding, oh no, you're at 1785, so you're still holding yesterday's low. Maybe just get a couple more tight ranges in here. Maybe like right now, I would say shorts are probably not going to worry until this thing gets back over 20.
Yeah,
Yeah.
I think they're not going to worry that much. But do you
Yep.
want to short something at 1790 and then it's 1990? I don't know how you control the risk at this point. Like, would you initiate a short here, Joel?
Wait,
Don't you think
Uh,
you're late? It's not like it's breaking down. It's
No,
like
Joel-
it's just
Joel
going
just said
straight
it.
down every day.
yeah, why not?
Joel just said it. $20. He just said it.
Yeah, I mean,
Okay,
if you
well,
want
you
to risk
initiate the
$2,
short at 1790, so you're gonna lose. You're willing to lose, 15% on that? I'm not.
You're
I
not.
would
depends what your
initiate.
time. If you're looking for 14 or 15, I mean, no, I'm not shorting it down here. I'm just saying,
I think you're over. I think you're oversold. I don't short things that are oversold. I short
is
things
there
that
is there what do people use for that?
People saying let's
Stochastics
move
or
on. I
whatever?
think everybody cares about these stocks. Though some people said nobody cares about HUD. I think there's a lot of people that care about
Yeah,
all of
a
these
lot of
stocks.
people are along this thing.
Actually, if you look at the volume on Hood, it's actually been going up. The trading volume.
They're
up.
panicking. You're getting to a point where eventually you're going to have
We'll
capitulation.
keep an eye on it. We'll keep an eye on it.
I'm looking more like a capitulatory event where you actually, turn around and you actually buy this thing. So
we're way below
I'm
the
not
IPO.
bearish. All these growth names, they're all the same story. It's hard to just come in here and say, let's short all this stuff now. Where were you 3 weeks ago or a month ago or 2 months ago? And when they were all over, the valuations were all ridiculous, like I've been bearish Zoom for how long on this show? Since $500. I was bearish earlier. I was bearish at 300 and went to 500, so I was dead wrong. Eventually came back in. But I mean, like Teladoc. Let's look at Teladoc. This is given back, Spencer. This is incredible. This is given back the entire thing from the pandemic. It's trading lower than it was before COVID started. I'm not joking. Go back and look. It's at 2019 levels. It has actually trading lower than it was before COVID started. We're still in a pandemic. And this has got nothing now. It's given it all back. This is massively oversold too. Massively oversold. And yes, they don't make money. And yes, maybe they're going down and maybe some of these companies are going to zero. I don't know. But I'll tell you, these things are epically oversold. So there is one day going to be a day of reckoning because it's been too easy on the short side on all these things.
I want to cover the other earnings real fast, and then because we're gonna have Cece on in like 7 minutes here, so I want to go to Rivian. Their first report since going public, and actually, you don't often see an earnings report happen so close after the stock goes public, but here we are with Rivian. So what they said they're probably not going to make as many cars this year as they thought they would because of the chip shortage and supply chain problems and all that. They produced 652 R1 vehicles through the middle of this month, and they delivered about half of them. They are expanding their annual production capacity. They announced a second plant in Georgia. That's the big news here. Is the second plant in Georgia. Their other one is obviously in Illinois. So obviously they're in hyper growth mode. This is not a case. Yes, they lost money. That's to be expected. Not a surprise there. But the second Georgia plant is probably the big news of the day. To go with the fact that they announced their annual production capacity expansion to around 200 vehicles a year at the Illinois plant alone. So the construction on that plant in Georgia expected to begin next summer. Annual production capacity at that plant should be around 400,000 cars once they get there.
Why? I don't know why this stock has held up as well as it has. So, the stock was holding 120, 120. They're hammering every high valuation name, and they would not hit this name. So eventually just craters. I think you got to look at the low, all-time low, 95.20. That's the level it's got to hold. That's your only level that's important.
Yeah, we did get to 96, just under 96 in the pre-market. So we got a little bit of a bounce, but Jack, you're right. 95.20 low of the move, just under 96 in the pre-market. So people still like it in that area. Once you take that out, that undercut the IPO, we know what happens when when that takes place, we have what Hood was the same. I mean, maybe we'll get Eric on again next month and have him talk about this one. But
It's a ways from there. I don't know if it's going to take it out today. We'll see.
no, we'll see.
I'm not, again, you can tell I'm not bearish a lot of these growth names right now just because I don't know about this one. But, the problem is, like, never really sold off. So I'm just taking a pass.
I don't know, $100. I don't know, right? That's a psychological level.
Oh, yeah, for sure. You have two bottoms there, too. So you're still kind of hanging out there. So let's see what it does. Let's see what it does 95 to 100. Can it hold?
Yeah. All right.
Guilty until proven innocent.
That's how everyone is to you. All right. Darden Restaurants.
Now you got to play this market right now.
Yeah,
Safety.
Darden Restaurants had earnings this morning, and it seemed like it was pretty good. Their earnings per share for last quarter came in above estimates. Their sales came in above estimates. And they raised their sales guidance for the fiscal year by a smidge there. They're looking at the mid to high $9 billion range, which basically came in line with estimates there. They also said that they, when you factor in, their increases, the raises that they've given to their employees and tips, they said that they expect that their wait staff at their restaurants will be earning approximately $20 per hour on average. I'm going to go ahead and call BS on that. Obviously, it is in Darden Restaurant's best interest to tell the public, look how much we're paying our employees. But in reality, it's probably not that high. That's just
I think it is going to be that high. I think we have wage inflation across everywhere. I do not want to own any restaurant stock at all. I tweeted last night about Darden restaurants having their margins squeezed. I don't know if that's the reason it's down, but I expected that they would be pressure.
Yes, it is basically the reason it's down.
Yeah. So, and I tweeted that last night, 12 hours ago. Look at my Twitter account. That I don't want to own Darden restaurants for that reason. I don't want to own any restaurant stock. They are getting hit on both sides. They're getting hit from product, from their inputs, their food inflation, and they're getting hit from labor inflation as well. They're getting margin squeezed, and then to throw it all out, we're going into another, Omicron pandemic type style deal right now. Restaurants, the absolutely worst place to be, in my opinion. I want to own 0 restaurants. It's maybe a McDonald's drive-through and stuff's okay, but sit down, casual dining, no, thank you.
What about what Chipotle just did, right? Where they opened what is basically a pickup and takeout location. There's no dine-in at all. It's just come pick up your food and get out of here, right? I mean, that's also sort of an argument against sit-down casual restaurants like Olive Garden, Longhorn Steakhouse, et cetera, which is what Darden owns. So, Darden was the one that spooked me originally, like a month or two ago. They were the ones that said, I think it was Darden that said, we're having massive problems hiring. And I was like, all right, I'm out of Starbucks because of that. Darden's spooky here.
Spooky.
I
don't know. I'm just scared of all this stuff. Sorry.
That's okay. I mean, you have you traded down 533. One daily low in this area of 41.19. Doesn't look like it's going to hold, but look at these 4 lows in the same area here. If you want to try along and you want to wait, or you got a potential, a short on this 137 area, that's what it's all about in Darden. $5 away. Will we see it today? I don't know. Longer term, though, you get 4 lows in this area, you break through 137. I'm not even going to pay attention to these other monthlies. So that's a key level. If somehow you do get a rally in this thing and you want to, try and squeak out the top of yesterday's range, or the bottom of yesterday's range, 145.60 potential resistance if we go into rally mode. Sure doesn't feel bad day to report too, right? Down market,
Not a good day to report, but it's the kind of stock, like, it's just this market is just trading so logical sometimes too. I mean, we had so much, just crazy stuff going on in 2020, and now it's like it's reconnecting with all logic. Like value stocks that were all oversold are coming back up. All these high growth names that should have never been there in the first place are coming down, and then it's just simplicity. It's like, okay, let's think about this: restaurants, pandemic, food costs going up, labor costs going up. Do I want to own that? No, sell it. I mean, that's just simple trading. Logic. Trading on logic. Wow. market's logical right now.
Real fast for those who
Scary.
care and for those who own like the TUR ETF, Turkey's stock market just got halted on a downside circuit breaker. So Turkey's like imploding right now.
What, a Turkish lira or something going on
Yeah,
again?
TUR is the ETF. Everything just got halted on the circuit breaker there. So Turkey's
Put a D on the end of it.
exactly, Joel. Exactly. All right,
Let's
let's bring on Cece Lagentor, the co-founder of Options AI. Today is a quad witch day, which means extra volatility. How do you trade that? Let's get Cece's thoughts. Cece, good morning. How are we doing today?
Good. How you guys doing?
We are doing fantastic. I know you've been here in the background listening for a few minutes. Do you have any thoughts on that prior conversation?
Well, so no, I loved what you all were talking about at the beginning of the show with just all of these ranges that we're looking at in these levels and support levels. And I've been staring at that IWM for like a month and a half, and it is right there, right?
Yeah.
And I love what I think it was Joel mentioned when on that upside when it broke that range and like getting everybody into the pool just to like whip them back around. And so, no, like that immediately I thought about that. Like if we saw that today, you might see a very similar situation.
Yeah, everyone and their mother was waiting for that breakout, and then it happened, and then, oh, nope, never mind.
Totally. Yeah, it's really wild. And so, and also, along those same lines, that that range that's gone back in IWM almost a year, the SPY's doing that little bit of a range you all were talking about, like that, 460, or 450, 470. And, same thing with an extra zero in the SPX. But, that's, if you look out, like what options are pricing into year end, they're basically pricing that range. And, the expected move is 450, on the downside and 470 on the upside. So it really is. It's like, it is kind of logical, like Dennis has been saying.
So I mentioned, obviously, quad witch today, options expiration. What does that mean for you? How are you tackling today?
Well, for options traders, it's sort of, this is something that they're used to, right? It's every Friday is an expiration, right?
All right.
What gets piled on a triple or quad witching is, all of these other derivatives expire. And then on top of that, you have, rebalancing of the indices. And I think it depends on like what type of trader you are and what you're trading, like what you should care about on a day like today. So from, just from a basic starting point, it just means more volume, right? It means a really big volume opened, and then it means a really big volume close. And that tends to mean some pretty weird moves, particularly in the indices. And then, of course, that goes downstream to the individual names in those indices. So you might see some weirdness on like that opening print, right? And then that last, sort of that last hour into expiration, in the afternoon for the close, you also see some weird moves. And then I would say also, if you're an options trader in particular, if you have options positions you're taking into expiration, you have to be very careful on a day like today, because you might see after hours moves, right? So something you thought finished out of the money, let's say like a credit trade or something like that, if it was closed, like I think on the show before we've talked about pin risk and things like that. Like it's almost like your pin risk expands on a day like today, because you've got all that kind of, something where if you were like 10 cents within a strike, you'd be worried about pin. You might have to expand that aperture to, 25 or 50 cents, because it might trade there after hours and you might be assigned on something, for instance, that you didn't think you'd be assigned on.
Yeah, Cece, this is a great point you're making, and obviously a lot of people don't realize that those options don't expire right at 4 o'clock. I know at Interactive Brokers you can exercise until 4:30. So if you're long, like the 50 calls and the stock closes at 49.5 but trades up to 51 after hours,
right?
In all likelihood those calls are now in the money from you. So the person who wrote you those calls is going to be like, oh, I'm good. Well, no, because they're going to short the stock at 51, exercise a call, make a buck. And you're just like, what happened? I got exercise on 50, close at 49.5. And it's like, they don't expire right at 4 o'clock.
Exactly. And so for the people at home, to sort of picture how that's working on the institutional side, what you described is the stock finishes 49.5. All the retail traders go home. Most of them probably don't even know they can, do an exercise on that out of the money call, or that they should.
90% wouldn't know that. Yeah.
Totally. And then what's happening on the institutional side is the stock is now $1 above that strike. They're selling the stock and exercising those calls, right? And they're making that dollar, and they're locking it in after hours. And so if you watch the, the SPY, the IWM, the Q options, they're trading for 15 minutes after the bell, and they keep a premium on that straddle for the 15 minutes. And in fact, I think they even kind of close at 4:15 with a little bit of premium left on them, because there's just so much uncertainty going on after hours. And it's pretty wild. And I've always said this about, like, now we're getting sort of into the weeds, but if you are an aspiring options trader and you want to understand options, take like SPY or whatever, even like Apple or something like that, in the last hour or the last half hour of an expiration, and watch the at the money straddle. And it particularly if a stock is like bouncing higher above it and below it. And when I was, first learning as a market maker, when I was training to be a market maker, that was one of those light bulb moments in options where you really understand that intrinsic, extrinsic value. And in that last hour or half an hour, you see basically an entire expiration play out in like 10 minutes. And what that will look like is, the stock will go above the strike, and you have the call plus its extrinsic premium, and that's reflected in the put, right? And then it goes back below, and they switch off. And now it's the call that's totally extrinsic premium, and then the put, which is the intrinsic, how much it's below that strike plus its extrinsic, which is the same as the call. And so it's really fascinating. You really understand, you get like a sort of an intuitive feel as to like that, expansion and contraction of those straddles and that premium. I would highly recommend it. If somebody's bored with no positions, watch the last 15 minutes of today, like in like a SPY option.
It'd be wild.
Yeah.
So from what you're seeing in the option markets, we're still looking a little range bound then for the end of the year, because observing the quad witches over the years, they have been turning points in the market a lot of times either, and so turning point. So you're looking for more range bound. You don't look at like if we had a bad day today and took out support, you think it's just going to be more of a seesaw market from what you're seeing out there?
I love the analogy of like getting everybody in the pool, which is, also like sort of the max gain or max pain, I'm sorry.
Yep.
So that 470 line in SPY, 4,700, and then that 4,600 in SPX, those are the biggest open interest, right? And, it's impossible to know exactly what's out there, what's retail, what's institutional and all. But generally what that looks like is that a lot of people bought, 460 puts, right, on that last sell-off. And that was when you saw that, the VIX spike up to over 30. And that the way that works is everybody rushed out to buy puts, volatility spiked. And once the market found some footing in reverse, it almost acted like it can act like a catapult. Because what happens is all of those deltas that the market makers are short for selling those puts suddenly collapse as vol collapses, if that makes sense, right? And it's sort of like the opposite of a short gamma squeeze that we've talked about, like where it's ripping through strikes. It can almost act like a catapult if it does find support, technical support, right? Now, the flip side of that is if you have a breakdown through those types of levels, it can get ugly really quick, right? Because that's the market makers having to, the VIX is back, 22 or something like that. They're probably under hedged those lines coming into this morning, right? And so they would have to, if it powered through those kinds of levels, they would have to pile on selling stock. So yeah, it's a tough call, but it's, and then you've got the holidays coming up. Everybody's waiting around for this Santa Claus rally, right?
Is it coming? Is it coming?
Yeah, nobody
Yeah.
knows.
Nobody knows. There it is. Cece says nobody knows either. But Cece does know these expected moves, and I mean, I'm a big fan of the expected move as well. Like, what are we looking at towards the end of the year? Are we still?
Well, let's look. Yeah, let's look. Let me. I always forget when I come on here how to share screen.
In the middle there where it says share screen.
Right there it is.
There it is.
All right.
I can't.
All right, can you guys see me?
Out either.
Yeah, we got you.
Okay, so this is what I was sort of mentioning. This is, an expected move chart on Options AI, and as you can see, like out here, if we come out here to the end of the year, like 12/31. Wow, this has really slowed my computer down.
That's all right. I see it. It's good.
Yeah. So basically, like you can see, can you all read that? Like the sort of 473 and 451. I mean, it is lining up almost perfectly, right? And what that means from, sort of a trading standpoint is, and we've got this to do a little product plug. I don't know if I've shown this to you all. We've got this cool new version of chart trading where you can sort of set support resistance levels and ranges and everything like that. So basically this is, you can set a support resistance level, you can set a range, and you can turn these into options trades, right? And so if you're looking at that SPY range, you come back to you get out here near the end of the year, that's a condor opportunity, for instance. If you're going to be neutral and you're going to be playing that range, and you can see how it just spins up this condor, and you're basically, this is pre-market pricing, but you'd probably be risking about 45 to make, or you'd be risking 55 to make 45 on a trade like this. And the way this works is, this is a condor, and it's basically saying SPY at the end of the year is going to hold that range, right? It's going to hold that for roughly 450 to 470 range. And this is that type of multi-leg options trade that can take advantage of that. And basically you are at max gain on this trade anytime if the SPY were to stay within that range. Now, if it were to break, that support down near 450, or if it were to break out above that 472 range that we have here, you're risking $50, let's say, if that happens. So it's like, this is those types of high probability bets you can do in options, in multi-leg options. Now, the flip side of that is, you could just play that support level too in the SPY. And you can say, I don't think this is, switch to support resistance, and set this sort of level. But that's the kind of, based on the discussion we've been having today, those are the kind of things that you can do in options. You can trade them really technically. And, you can, particularly credit trades, like what I'm showing, you can really have a high probability trade where you have defined risk. And if the stock were to break down below that support, you know exactly what you're risking.
Nice.
Yeah.
All right, Cece Lagentor, and you can see his site right there. It's Options AI. The link is in the description. Check it out, Cece. Happy holidays, man.
Yeah.
Christmas, Happy New Year, all that. Happy options exploration. Happy quad witch. We'll talk to you again next year. Have a good one.
Excellent. Good to see you guys.
Thanks, Cece.
Good to see Cece as always. And by the way, that chart. The reason I love that chart and bringing Cece on is because I'm a very visual person, and that visual displaying of the options chain it works better in my head than an options chain does. So I like how they've displayed the information. All right, we got 10 minutes left in the show. Drop your tickers in the chat. We'll take a look at a few of them here. Reminder that we do, and CC also mentioned this, we do have the NASDAQ 100 rebalance happening at the
Lots going on.
So I dropped the links. I dropped the tickers into the chat of the tickers being added and removed. Airbnb is being added. So this will all be added basically at the close today. So there's going to be a lot of volume at the close in these names. Airbnb, right? Fortinet, Palo Alto Networks, Lucid, Zscaler, and Datadog. Those are your 6 that are going in. And then CDW, Fox, Cerner, which actually had some news.
It's so interesting. Let's go to Cerner in a second.
Okay, Checkpoint getting taken out. CHKP, Trip.com, TCOM is out. Insight, in the INCY, they're out. So there will be volume there into the close. So Cerner, CERN, this is actually moving because not of the NASDAQ rebalance, but a report out of the WSJ that Oracle is in talks to buy Cerner. What was the price? 30 bill?
30 bill, as much as 30 billion.
Yeah, 30 bill is
just
what
rumors.
Said. Yeah, just rumors right now. No confirmation, no nothing like that. And I think that represents what? I think the close yesterday was a 23 bill, somewhere around there. So that represents a nice little premium here.
So interesting because Christian Fromhertz pointing out as well last night that, this is in the rebalance. So how many people, because it was getting taken out, how many ARBs are sitting there short CERN into it? There could be a few. I mean, I don't play it ahead of it like that, but some people do. So thinking that the ads are going to go up and the deletes are going to go down, it's the old school textbook way to play it. But again, it doesn't always work that way. In this case, ouch, if you're short CERN.
So, wow. Is that a match made in heaven, Oracle and Cerner? I mean, I don't know. I don't
know anything about it either.
Yeah.
Me neither.
Oracle getting hit, though. Okay, so here, Oracle's down $6 on the rumor that they might buy Cerner. I mean, you're getting into a gap area. Here's a company that gapped up on the report. I tend to think that they might actually, I don't know. I don't think it's like a PayPal situation where they're going to continue to hammer it. This is a value stock. I own Oracle too in the long-term portfolio. But actually, I was trying to figure out if I sold it or not. I never looked. I might have sold Oracle this year. I said that the other day because I had Oracle in there forever, but it was in my RRSP, so I don't have tax consequences. I'm not sure if I did sell my Oracle. But anyway, so I don't know if I'm I actually have to go look at my long-term portfolio to see if it's still in there. But I don't know how to pull back here on Oracle. It's probably because it's in a gap area. There's nothing in here.
This is no way.
I'd buy it at 90.
Yeah. Yep.
But I ain't going that far. I tend to think that people will buy this dip on Oracle.
I don't know. This is no man's land.
And it depends if they actually go through with it or not. If they come out and they say the rumor is bogus, it goes right back up. They come out and say, "Oh no, we're going to buy it," and then
it doesn't go back up as much though.
Never does.
They pound it. You're leaning on the pre-market low right here. Nothing down there to 90. If they do call the deal off and or it doesn't come out, usually these things come out pretty quickly after they're rumored. 102.28. That seems a long ways away. That's the bottom of the range from yesterday, and the bottom of the gap. You might see that. The low since the earnings has been 99.39. So another potential resistance point there. In Oracle,
Novavax just got a pop because the WHO just listed their vaccine for emergency or approved it for emergency use, I guess. So NVX popping off that FYI.
I cannot believe this stock is where it is. Like they did everything wrong. Like it took so long to get their vaccine out. And it's like trading the same as Moderna, really. I mean, it's up maybe even more than that if you look at where they are relative to when COVID started. I mean, Novavax was a $6 stock, 194. Moderna was $18 stock, 282. I don't know. I'm just absolutely shocked that Novavax was given this much premium when they couldn't get the vaccine even out in time. I mean, we're so late to the party here. Now they come out with a vaccine that they're going to be approved. Is it even any good against the variant that's going around? So late, took so long, so slow. Absolutely don't like this company, but because they were so slow on all of this. But it's popping on the news, obvious.
Someone's walking it up right now.
It's breaking news, so that's what happens. So they start walking. It's still price discovery.
Well, it took out 203.60. That was a high here. If you're waiting for more, just two potential levels, 212. November 30th high, and then if they really want to jack this thing up, 229. There's his potential resistance points here. If if you just got the calls or something, you took a stab on the 200 calls, potential areas of resistance. It's going to be a 212 here momentarily. We just take 208.
D Hall in the chat brought up Carvana. Have you guys seen Carvana this week? What has gotten into the I understand that
hammering it, man.
Yeah, they're hammering it. It's below
Same
200.
Thing. Nosebleed. They hate the nosebleed stocks right now. Yeah. And somebody was getting hammered in this last night too. Like there was somebody that was just selling multiple growth names, and you could tell it was the same person because the way the orders were, it was 1111 on the exchanges. So you could tell just from looking at the montage that, okay, well, it's the same person selling all these stocks, same institution. I don't know if they were getting blown out or if they just couldn't take it anymore, but they were selling Carvana, they were selling Workday, they were selling Airbnb. They were selling MasterCard, they were selling Snap. They just couldn't take it anymore. And I don't know, like sometimes you think it's almost could be like a margin call situation, but holy mackerel, this has been hammered too. Again, way oversold. But again, nosebleed levels. Is Carvana a cheap stock? What's it trading, Spencer?
No,
like
the answer is no.
No, it's not. Nothing is. None of these stocks. And
The answer is no.
These stocks that aren't cheap are just the ones that are getting punished the most.
Yeah, and they're probably. You know what? Actually, this is probably not that dissimilar to what Zillow was going through with the iBuying.
I was just thinking that, Spence.
Yeah, okay, we're on the same page there. All right. Yeah, because they're overpaying for cars, right? Probably.
Yeah.
Yeah.
As long as they can
How
flip
the
them. I mean,
monthlies.
maybe the business is still doing well, but the stock just probably should never have been where it was. You're in a situation where we're 1999. You're going to look back at some of these companies are going to do very well. The companies themselves are going to do well. And it's going to take years for the stocks to get back to, where they were probably in a lot of these cases.
Avis budget's coming down to earth too a little bit, huh?
Well, every retail stock, every retail loved stock just coming back and getting hammered. I mean, it has been, if they were talking about it in your Twitter nonstop, those are the stocks that are hitting the hardest.
All right, so they're saying we should look at Room 2 VRM while we're at it. I mean, yeah, the charts look the same. Although
I haven't looked at that one in a while. $10, 70 to 10. Ouchie. You think it's going back to 70 anytime soon, unless we get into this raging bull market again, where they start just buying stuff hand over fist? And that's why I keep saying, crypto's got to be next, man. Like, I mean, we've hammered the growth stocks so much that I know we got Pomp up there saying Bitcoin's your perfect inflation hedge. It is totally correlated with risk assets, and it's been coming down because of risk assets. But there is so much money hiding in crypto here. I just feel like they're hammering all the, the growthy names, the high PE names. Well, all these cryptos don't even have cash flows or anything. It's just nothingness. So I think all of these Doggy coin and all these other coins, the only one I like is Ethereum. It's the only one I'm still holding. I think I actually still do have a small piece of Bitcoin in my one retirement account, but it's very small now. It's mostly Ethereum. I'm holding Ethereum because I think there is utility there.
Please hold, man. Please stay with
Please hold what?
Ethereum. Stay with me here.
I'm trying to stay with the Ethereum. I sold a piece.
All right. Okay.
But I'm trying to hold it.
Let's do one.
I want to sell it all these growthy names.
Stay with me here, man. Let's do a couple more. Let's look at American Airlines for ambient and stuff in the chat.
All the stuff's getting hammered because we don't know where the virus is. Right now, we don't know how bad it's going to get. Some people are saying, they could get to 1 million cases a day in the U.S. I mean, even if it's not that deadly, it's going to scare the hell out of a lot of people. So, and it's scaring the hell out of the people that own these stocks. So I can tell you the reopening trade, the great reopening that was supposed to happen, kind of happened, but it wasn't as great as we thought it would be. And now it's the great closing trade going on here again for a lot of these names. Is there going to be a buying opportunity in some of these names eventually? Probably, but I don't know. I don't want to be too early on that trade. So I'm just going to sit back and let that one go. You can have
cut an area of support here. You're down 11 cents at 16.41. You've had a buyer just above 16. Lows between 16.15 and 16.30. So leaning down on it pretty hard. What do we have in the monthlies? Ooh, also a monthly though at 16.33. So after that, your January low, your low for the year, 14.71. So coming in to support here, holding up okay, only down 9 cents here, but we'll see what happens. 16. Spoo's trying to get a little bounce here. We've been as low as 46.24 and a quarter, or about 9 handles off that. Folks, I wish I could give you a better number than 4,600, but there isn't one. That kind of splits the lows from earlier in the week. We've gotten near there, and I wish I could give you a better number than the close today. I'm sure a lot of people would like to see that close at 59 and a quarter, but it's been doing what it's been doing in this 4,600 handle, and it's just been ripping up and down.
I
So
want to say something here. It's options expiration. I'm seeing rip your face off buy imbalances in all the consumer staples and all the value names and all the defensive names. And I'm seeing big sell imbalances in the growth. These can be turning points here. I've been talking about the consumer staples being overbought here. I probably will try, if some of these gap up just silly here today, I think it might happen because of these buy and bounce against option expiration, anything can change. But just for instance, like I'm looking like, like Philip Morris MO, and I'm not sure it's been taken off, but it kind of has. I'm looking at 1 million shares to buy here with a projected opening of 54 right now. I mean, that's not going to open that high, but that's a huge buy and bounce. I don't know if that's going to hold. I'm looking at a lot of max projected openings too, meaning like they don't even have enough liquidity to do anything with. Philip Morris PM 581,000 to buy, just changed. So they got $149 projected opening on that.
Sold.
Close at 94. I would sell 149. It's not going to open that up, but some of these stocks might open up $2-3. It's possible. That would be upside capitulation on some of these names. So it looks to me like somebody is buying a bunch, and it just changed. It's funny how it changes. Some of these actually just flipped. So you got to, pay attention. Yeah, some of them just flipped around. They do flip around, and some of them are flipping around. But just saying, if we get into this market where they really start buying all these, they can't help themselves, and they're really ripping, these consumer staples off the open there or at the opening print, I might fade those moves.
All right,
typically,
everyone,
these option expiration days are fade days.
Great quad witch. I got to hop. Spencer, I'll check in with you in a little bit.
All right, yeah, and I feel like mimicking what I did yesterday with the reverse for these imbalances, right?
They're going to go all over the place, so it's hard to put weight. All you can say is you don't know where they're going to go, but I surround the fair value. So stocks closed here, I'm going to short up here, I'm going to buy here. If they open up here, I'll be short. If they open up down here, I'll be long. I'm fading, and typically that's the move. It's not chasing and saying, oh yeah, I want to buy, when something's gapping up, 2-3% above fair value. I don't know. Sometimes these are nothing burgers. A lot of these days are still nothing burgers where they're supposed to open here and they open kind of here. Stocks open here, I'm short. Stocks open here, I'm long. It's how I play it. Right. Trade.
Zippy just asked me if the market jumped off a cliff, would I do it too? Why you ask me existential questions, man? I'm not in the mood for that today. It's a Friday.
He's got to think about that. He doesn't know if he wants to jump off the cliff or not. It depends on how this day goes.
That's an existential question. I can't think about heavy things like that right now.
Depends how this day goes.
All right. Go ahead and smash that like button for us. We'd appreciate any and all likes. It sounds dumb, but they really do help us. Thanks to Cece Lagentor. Dennis, have a great rest of your day. Have a great weekend. We'll catch you on Monday. Joel will be on with us later in the day, obviously, for the At the Close show. Everyone on the chat, we appreciate you as always. If we missed your ticker, just stay tuned to Live Trading with Benzinga, which coming up next. This video will end and redirect you to that stream on youtube.com/Benzinga. Reminder, Benzinga Pro, free 2-week trial. Also, a holiday discount. I believe you can get 35% off with the code JOLLY35, JOLLY, JOLLY 35 to get 35% off your Benzinga Pro that I think is ending in the next week or so. So check that out there. Pro.benzinga.com. We're always available on podcast, guys. I don't mention that enough, but if you miss the show, you want to listen to us in your car or whatever, go on any major podcast platform. We are there. SoundCloud, Spotify, iTunes, whatever. We're on all of them. All right. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. I'll catch you guys over on our next show, Live Trading. Ryan, Junaid, Mitch, myself. We'll see you over there. Everyone, stay green.